here we have three stocks: GDS, KC, and VNET. These are China data processing stocks in the same sector. If you want to make huge returns in the stock market, you normally want to find the strongest industries and then find the best stocks in those industries. So this was a very strong industry last year, because of AI. So GDS went up 430%, Kingsoft went up 1,000%. This is all from October. Then VNET went up about 800%. And then after that huge run up, that we can see that they've consolidated for almost a full year, and then now they look like they are going to make some extraordinary returns. And in this video, we're going to see how can you profit from these stocks. Where should you buy? Where should you put your stop loss? And also, we're going to learn about industry analysis. So which one should you buy? Normally, you want to buy the one with the strongest fundamentals. Another good sign is whichever stock breaks out first and has the strongest price action. Which one kept its gains the most? You see, the pullback in GDS was way heavier than the pullback in KC, while the pullback in VNET was also way heavier than the pullback in KC. So that shows you that KC had more investors who were not willing to sell the stock because it refused to close under the 30-week simple moving average. So that's a first good sign. Then we can look at the technicals. They all look like they have the same setup. If you're enjoying this video and want to build financial freedom using the stock market, I put together a free guide called 10 chart patterns that make money. It's based on the exact system that we use at Profit Punch, a financial newsletter and educational hub that sends you A+ stock setups where we tell you exactly when to buy and sell, and also will teach you stock trading from the ground up. These are the same patterns that our members use to catch moves like SMCI 250%, Nvidia 200%, AppLovin 350%. The guide is short, visual, and beginner friendly. Just click the link in the description or pinned comment to grab your free copy. Now back to the video. Then the next thing is we go into the stock itself. Let's look at KC. I had already recommended it to people in a newsletter, so I guess they're already profiting. You see that nice cup and a handle, the fundamentals, they're all over the place. This is mostly a play because of the sector that it's in. Sometimes the fundamentals might not be good, but since it's in a strong sector, then investors will still pile in money because they believe that fundamentals will be great in the future. If we look deep into this weekly chart, we can see that the breakout weeks have the higher volume. That's a very good sign, right? Look at all the green weeks. They're the ones with higher volume. The red wicks have low volume. These are very telling signs and signs that we like to see. So we can remove our drawings and then you can look at it more clearly. So the breakout wicks, that's nice. It's forming the nice handle. Even after this huge breakout wick, the stock refused to close under that wick. It just kept within that range. That's another good sign. So when we come to the daily chart, then we can see the nice cup and handle. The stock is very gappy because this stock is an ADR, so it's basically a receipt of a stock on the Chinese market. That's why there are these gaps. If you look at the primary stock itself, which is on the China market, then it is not going to have these gaps. But since we want to trade from the USA market, I am using this. So yeah, we had that huge 1,000% gain last year, which was amazing. And then now I'm hoping that the stock can do something similar. So it has formed this handle over here. So that's a very good sign. You can put this over here. Then you see this green bar over here. That's a breakout bar. One thing about this breakout bar is that you don't want the price to come below the breakout bar. Even if it comes just even halfway down and closes below half the breakout bar, that's also another scary sign that, hey, maybe reduce your position or start to get out. Maybe it is not setting up right. The reason I say this is that you can see at first I thought this was a breakout bar, but it didn't move up immediately. Sometimes you might have to try 1 to 3 times to get into these stocks, but that is a very good risk to reward ratio. For example, if you're going to get a 400% return, if you just lost 5% 3 times, that's okay. You can always come back and then in the final time, you're going to make a very huge return. So KC is still a buy right now. I would put my stop just below the low of that green day. VNET is the next one. That one also I thought had broken out before, but it didn't. So you buy it again. So it's still a buy. The stop should be around $8. Sign up to the Profit Punch newsletter if you want to know exactly when to get into the stocks. I do it all for you. Money back guarantee as well. Then if we look at GDS, this one did not stop the people out. They bought it around here, $34, and they're already in profit. So normally what I like to do is that once it moves 1.5 average true ranges, that's why I put this goal 1. I take off a fifth of my position. This is because sometimes if it pulls back, then I'm not going to lose money. So after it has moved 1.5 average true range in my favor, I took off a fifth of the position, and then I raise my stop to half of my original risk. So that means that I have really taken out a lot of risk in the trade, and it's likely to be free money from there. Now, GDS is my third option. I would actually buy VNET and KC the first. Now that we are done with those stocks, then there is another one which is a very honorable mention. It's not part of the data processing stocks, but it's showing very nice price action. This is called HSI. Last year, it went up 500%, which is a very huge gain. And then here we can see something called a virtual contraction pattern. So it first drops 50%. The second drop is about 25%. It does another around 25% drop. Then the last drop here is tight. It does just a 14% drop, and then it breaks out to all-time highs. Immediately, that's a buy. The price is still above that breakout level for several days. That's a first good sign. The stop is around $24. That's how I would do it. I think I would still buy this thing right now if I was watching this video. So the stop would be around there. So just have like around a 10% stop. My stops are best on the average true range. For more volatile stocks, the stop will be way wider. How do you sell? You wait for a close under the 20-day exponential moving average. So for example, if you bought here, this breakout, you didn't have to sell until, so you want to close and then it moves below. So here was the first time you could have been triggered to sell, but then you'd have bought it back the next day, right? Because it recovered immediately. Then the next sell that was genuine is, I think, around here. So here it closes, and then you'd have had a 300% gain, which is very good. So those are the 4 Chinese stocks that are looking superb. They're ready to buy now. If you want to know exactly when to buy and sell, I'll be doing it all for you. Don't forget to sign up for the Profit Punch newsletter. May the markets be with you. I look forward to seeing what is going to happen.